This is the Investor Connect podcast program. I'm Halti Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Mark Peter Davis of Interplay. Mark, thank you for joining us.
Thanks for having me. Happy to be here.
Great. We had a previous interview a while back in which you talked about Interplay's fund, but I'm sure a lot has gone on since then. Can you give us a short update about yourself and what you've been doing since our last interview?
Yeah. So brief background, I'm a lifelong entrepreneur and VC. Interplay is a New York-based venture firm and foundry. The venture firm invests primarily in seed to Series B with a focus on Series A tech companies, tech-enabled services in the US. We have been very active. We've completed 2 deals already this year and are looking to actively invest. I think like everyone else, we've been recalibrating for the new world we're living in. But after a month or 2 of that behind us, we're reorganized and leaning into the market.
Well, that's great. Sounds like you're getting back to the new normal here, and glad to hear that. So, for our listeners, we always are interested in, your history and investing and your experiences there to share with them. Is there a particular company that you regret not investing in, and why didn't you invest at that time?
There's probably a bunch, and sometimes you forget that you even saw the good ones that came by and you hear about in the news later. One that comes to mind is ZocDoc. It's done very well. We missed that one, and I think at the time we just saw it at the wrong part of the fundraising cycle. We couldn't move fast enough to do the deal, which is a common challenge VCs face. They have to be thorough in their diligence. And if not everyone sees each deal in the first moment the process starts. So that's something entrepreneurs often don't know is when they're trying to add VCs late in the cycle, the timing doesn't always work out and they simply lose investors based on that alone.
And so in general, what sector are you passionate about and why these days?
So we actually take the view that some of the most interesting stuff comes from the least interesting sectors. So while the stuff that gets written about the most in the media might be, ride sharing or micromobility or whatever the latest trend is, we get very excited about businesses with raw fundamentals, and those can come from any corner of the globe. So we've done things in hardwood flooring to things that are more popular, which be tech-enabled media strategies. So again, when we do hardwood flooring, we're doing SaaS technologies for the hardwood flooring industry. But when it comes to a sector, I always shy from that question because there isn't a particular sector that jumps out at us as on the investment side. We like to interact with people who are having experiences in sectors that we've never dabbled with. I believe pain, that phrase, pain is the mother of innovation. So there's someone driving a tractor somewhere who knows how to use technology and knows it's not being used in the right way. And I want to talk to that person. I want to hear about the new angle where we can implement technology and help them build a business in a space that's not being paid attention to. So for us, in order to have innovation in sectors that people aren't paying attention to, you have to look to entrepreneurs, to the crowd for that innovation. And that's always been our approach to it. We've been successful through our large platform and sourcing lots of deals. I didn't mention at the beginning, but we have a 500-person operating platform at Interplay that provides services to the startup community. We do everything from commercial and health insurance, marketing service, software development, leadership training, accounting, tax, CFO, all sorts of different core services that entrepreneurs need. And that's invaluable for us and it gives us the opportunity to see lots of different deal flow in lots of different parts of the world. It gives us a lot of information to help make investment decisions, and then also enables us to add a lot of value to the entrepreneurs we work with through the platform. So that group services something close to 15% of all venture-backed companies in the US. And so when we're seeing innovation, we're seeing it come from all the little different corners of the market in places where, maybe our LPs, maybe, our partners have never seen. But those could be fantastic places to be deploying capital.
That's great. So have you avoided investing in any particular sector? And if so, why?
No, we haven't. In the post-COVID era, we are more sensitive to certain dimensions of opportunities that I think we may have been sensitive to, but less so for COVID. So I think we are dialing how we operate. But fundamentally, we don't avoid any particular sectors outside of probably vices or things that would be inappropriate for an institutional investor to be involved with. I believe there's different ways to approach each market, and we're focused more on the underlying business models and financing strategies and operational KPIs. Now, that said, there are things that are just out of scope for our firm. We do tech and tech-enabled services, so we're not going to do a new pharmaceutical drug or something else. But I think by the question you were referring to within tech, and within tech, we like to look at all the sectors and identify opportunities where there's the technology is, the business model is, and the fundamentals work. So that we're really looking at the underbelly of companies to identify whether or not they're appropriate fit for us.
Good. And so what was your worst experience with a startup without mentioning any names? Maybe you can describe what went wrong and why.
Yeah. Married couple, they had infighting. They got into a spat with all the details I don't know about. I believe an investor. Lawsuits started flying, and then I think the founders stole the company's money, and the rest of the story remains to be written. We did see that.
So you think fundamentally you shouldn't invest in married couple deals just because of all the dynamics that go on, or is that just a one-off situation?
I think it was a one-off situation. I wouldn't say you can't invest in couples, but I think there's nuances when people have romantic relationships in a workplace for sure. But I think the issues here were broader.
All right. And then on the other side of the table, what was your best experience with the startup and why was that a great experience?
That's kind of a tougher question in some ways because the best experiences are when you get along really well with the teams and they're building great things. I mean, we've had great experiences being supporters of companies like Coinbase, Course Hero, Warby Parker, and dozens of others where things have just gone swimmingly and we're supportive. Doesn't mean the business is always performing perfectly. That's life. But as an investor, I think what you're just looking for is honest people who are working hard and doing smart things. And if you have that kind of combination, usually you're getting the outcome you should get.
And so what are the challenges that your startups face today? Is it regulatory? Is it the technical? Is it market? What do you think they spend their day working on solving?
I think it really varies by company, right? We're involved with one company that has brought the lottery onto mobile phones.
Oh, wow.
And it's a very big concept and they're having tremendous traction, but I don't know exactly how many years at this point. It must have been 5 years of getting through the regulatory environment.
Oh, wow.
Right. But I think that's going to pay off. On the other side, you have companies just dealing with every day-to-day issues, finding talent. That's an area where we help entrepreneurs quite a bit. Or they're dealing with pricing strategies, or something that investors usually aren't talking about is culture within the companies and how that drives retention and innovation. So I think all the fundamentals are really what drive the businesses. At the end of the day, it comes down to the brass tacks of the maybe less sexy stuff to talk about. And I think most of the conversations we have with founders are going to be one of those flavors, which is basic fundamentals. That's not as fun to write about in media. It's not as fun to talk about. But at the end of the day, it's you got to get up and you need an ops person, and that's what you need to make the ball move forward.
Oh, great. And so when you vet a startup, what are the first things you're looking for in that startup as just an initial pass before you move forward into next stage with it? Are there one or two things that come to mind that says, yeah, this is somebody we need to follow up, or no, it's over at this point?
Yeah, I think VCs generally look for a certain set of criteria kind of universally. Everyone's looking at the same baseline criteria of a great team, product market fit. I think for us, where we start to dial in a little bit, and other VCs obviously look at these things, I think we are very focused on them, is we're looking for companies with material amount of traction. We believe that when a company has revenue, in almost all cases, but in some exceptions, just customer traction, we're able to learn a lot about the business and its risks. If a company is delivering a product in a market successfully and they're doing millions of dollars in revenue and it's growing very rapidly, we know the company's, at least fairly functional at the team level. There might be some hidden issues. They've got pricing figured out. There's product market fit. Customers want to buy this thing. It goes on. And a lot of those risks go away. So we like that as our first piece. And then within the traction, we dial in and we're very focused on a lot of the marketing equation KPIs. Kind of the universal overarching one is the CAC LTV. And I think that applies to both B2C, where it's usually used, and B2B. B2B and enterprise businesses, you can quantify the cost of acquisition and the value of a customer. And so we're looking to see that every transaction, either initially or over a defined period of time, is profitable. And if they have that, then they're going to have enough capital falling down the P&L to cover overhead and really fund growth, even without outside capital. So we like those. We like to really focus on that indicator. I think when companies show up and they're growing rapidly and they have that alignment, they have a profitable marketing equation, profitable contribution margins, I think they're usually well positioned if the market's big to go the distance. So it's a very significant data point for us.
And how are you evaluating the team in the very early stages? What are the initial things you're looking for there to see if it goes forward?
We meet with so many founders and do so much interviewing through our platform and through the companies we support that there's pattern matching after you interview tens of thousands of people. And I literally think we're in that level of volume at this point. There are real indicators around things that are going to be drivers of success. Our viewpoint is the drivers of success in a team are not some outlandish new scientific strategy or some fancy thing that's being pushed. It's core basic values and fundamentals that make people function. They're honest, they work hard, they follow up and are responsive, they're organized. And if we're seeing a bunch of those things aligned with a good vision and good KPIs, it's pretty easy to get behind.
Many groups are looking for teams that can work together in an interview across Zoom or on the phone. How do you establish that, or how do you gauge that?
There's no way to know for certain what's going on behind the scenes, right? There's just no certainty of that. So we look for the indicators on team functionality through the financial performance of the company and their ability to hit operational milestones. If they've been releasing their product within the timeframes that they said they would or thereabout, and if they miss it, that's fine, as long as there's reasons, you can understand that. If they've been hitting financial KPIs, rolling out new initiatives, that usually is a very powerful indicator for team dynamics. In terms of how people are functioning on an interpersonal level, you try to get a sense of chemistry, but even the bad teams, when they're raising money, often will pretend that things are great, put a smile on. So it's a little hard to know. The best indicator is really the operational success of the business.
And what's the one thing they can do that will just kill the deal straight up? What if you had to pick one thing that will just sink it right there on the spot? What would that be?
I think if their fundamentals aren't great, we've seen founders fight in the pitch meeting. That's probably a bad indicator. There's a litany of things that can give you bad signal about what's going on. The good thing is, since we're very focused on the fundamentals of business, I think we take, to a certain extent, an old school approach to evaluating extremely high growth companies. The companies we're looking at, usually there's enough data to understand a lot of the prospects of the business beyond just the version you're sold, which usually is honest, but there are snake oil salesmen out there.
Absolutely. And as a fund, you lead deals as well as follow deals. Is that correct?
No, we only follow.
You only follow. Okay, great.
We follow, and primarily Series A.
And when you follow deals, what's your requirement of the lead investor as far as how much they put in or how much diligence they do? What are you looking for there to say this is a deal we can engage in?
So we do our own diligence. So we don't really care too much about how the lead investor makes their decision.
Okay.
We make our decisions independently often before there's even a lead. We are focused on, we do like to have strong leads involved with the companies. For us, that means a partner that understands their business, that the founder feels like they're compatible with, which is a very important just human element of the dynamic. We'd like firms that have sufficient capital pools to support the company through future rounds of fundraising. Those are the main things we're looking at. Branding does help the companies raise future rounds, as does the networks. But we have networks of our own, and we can be helpful to the companies in that regard. So the main thing is we're looking for, if a founder tells us, hey, I really hate this lead, but it's our only option, that's a flag for us.
Yeah. What are they going to say about you later? I understand. Well, in the last few minutes that we have here, what else should we cover that we haven't?
There's some stuff I would offer. So it's been a little while, and I'm probably the worst book promoter out there, but I wrote a book on raising venture capital called The Fundraising Rules. So that's available to folks if they want to grab it. It's on Amazon. It is a handbook for raising capital, broken down into small segments. So people can say, hey, I'm at the phase of pitching VCs. How should I contact them? What's the best method? What do my documents need to look like? And that's all piecemealed out throughout the document. So that's available to folks. That's called The Fundraising Rules. I have a bit of content on my website, talks and otherwise, that I think can be helpful as well. But if you're raising money, it's never been easier than it has been pre-COVID. I think it's still fairly easy at this point if you have the right type of business opportunity. VCs are accessible. They're marketing themselves. So if you're not getting traction, maybe you're doing the wrong thing. And if you are, just be thoughtful about how you run your process, and the book might be able to help you with that.
Great. Sound like a good resource. We'll put that in the show notes. Sound like a great book that all the listeners should get in touch with. How best for the listeners to get back in touch with you directly?
Yeah, I would say there's a couple. One more answer to the prior thing too. I mean, through our platform that I mentioned earlier of startup services, companies that are clients of those services, whether it's the insurance business or the accounting or otherwise, we actually help make VC intros for our clients. So that's a thing for everyone to think about. Just to give folks a list of the names in case they're helpful to them, we have a company called Chelsea Capital, which does accounting, CFO service, and alternative finance, so think non-dilutive capital. A company called Firon that does marketing services. Founder Shield does commercial and health insurance. Greenparc does office cleaning. Spark does software development and design. Spoke does outsourcing. Truman James commercial real estate, and Venwise helps folks with leadership training and peer support. So you can engage any of those companies directly. If you want to engage Interplay, we actually have you can contact me easily. I'm easily accessible on LinkedIn. But in addition to that, we actually have a concierge service where any entrepreneur, whether they're a client or not, can spend 30 minutes with someone on the Interplay team getting intros that they need to other service providers. So if that's something you're trying to figure out how to navigate, we can help you with that. And then again, if you're a client, they also make intros to other venture firms.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you. Thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.